starting the web. All right. Well, welcome everybody. This is officially the Finance Committee meeting. I sent out packets to folks. Everybody got a packet. Anything that's not on the agenda that you would like to have on the agenda? No?
No, I'm good.
So we have welcomed and reviewed. Now, let's move on to our current financial reports. You put those in the packets. These reports are actually two different sets of reports when we talk about current financials. One is the one we get from our bookkeeper, that's the official material in QuickBooks. And the other is Mike's reconciled budget to actual expenditure by line item, month over month for you for the quarter. Did folks have a chance to review it? Would you like Mike to speak to it?
Just if it's appropriate, I'd like to ask a couple questions about the it's the first document.
Yep.
It's called Statement of Financial Position.
Yep.
And I just want to make sure I understand how we've included the new subsidiary in this or included it from it.
So I can speak to that if you'd like.
Yep.
So because there's been several occasions when we were supposed to be turning a majority of the facility over, we've just been keeping a ledger for those expenses, but we are passing through. So that's pretty much all done in a separate account. Any carrying costs for the facility or any of the waste payments come out of the contingency account, but we make sure that we pass through the bookkeeper those accounts. So when we do end up at a sale, that we're turning the ledger over and everything can be reconciled.
Okay.
Our intentions weren't to keep the MWS transactions going through the contingency account because this was supposed to be sold by now, and we thought it was going to be a very limited time when we acquired it in August. But we're still here. So
the statement of financial position includes MWS, is what you're saying.
Yeah.
yes,
Yeah, Michael, if I can jump in.
sure.
Sure, a couple of things on the statement of financial position. I know that Colleen tries to do a consolidated account of the MRC administrative funds, the joint venture funds and other funds, but for some reason, it still isn't debugged. So if you look down at TIPI stabilization fund, it shows a negative balance, which is clearly not the case. And similarly, there's a line item called Revere exclusivity, which is shown as a negative asset, which is also not something that I believe that the MRC should endorse, because I think that's not the state. The MRC, the Revere funds were non-refundable, so there's no, the MRC owes nothing on that account, and I don't think we want any documents that would support that particular interpretation. So I just, and I would also say that the receivables are based on invoices that have been issued, but do not reflect services that have been, disposal services that have been provided, but for which invoices have not yet been issued. So it's not a gap compliant line item. But it's an internal system for monitoring things, but I would be a little careful looking at that statement of financial position as something that an auditor would review and endorse.
I look at it a little bit different, George, and I'm gonna bow to your greatness, financial wisdom over mine. But when I look at, I think the negative is there because it's not an MRC asset. We are holding it for somebody else, just as I would call the the liability, I mean, it's like I think we're a fiduciary agent right now for those funds as opposed to owning is how I would look at it. So,
Yeah, no, that's helpful. I think then the balance of the tip fee stabilization fund ought to be shown under the current assets. And if there's an amount that's basically an equity position that's owed, that ought to be aligned under equity and under the liabilities and equity. So I think, there's a little bit more thinking. I hear your interpretation was absolutely the right way to go for the consolidated, which is to say that the MRC has holding assets on behalf of others, and those others are joining municipalities. But it shouldn't be shown as a negative asset under tip fee stabilization fund. It should be shown as a liability under equity, as the joint members own those assets, and that's where it ought to be shown. So again, it's helpful at a glance for those who are aware of that. But I just wanted to point that out because if there's an equity position of the joining members, then the asset that's held ought to also be shown, and it's not in the asset.
so I've never used QuickBooks. That's why we have the bookkeeper.
Yeah.
But in municipal entities do a lot of fund accounting, and I guess I think if we're going to do this for any length of time, which I think we are going to do tip fee for longer, right?
Yeah.
The paying of
Uh-huh.
bills and collecting of member dues, that's something.
Even if we were to, so are you talking about if there's a partnership formed and we still manage the waste? We would not run that through our books. We would be invoicing it through the ledger of MWS would be turned over to the new majority owner, and they would start their own MWS account, and we would be invoicing through MDS, and those deposits would be made into MWS. We're not going to deposit in MRC and then move it back over to MWS.
Okay.
Right. Yeah. No,
I
but
think-
do think, right.
I think I'm still in that short term where if it's gonna change, then I would prefer not to alter things too much. But if it's not gonna change, I think at the very least, we should be opening up funds.
Yeah, I agree. If after June, we're still in the same position for our next, I think. I mean, and George, correct me if I'm wrong here. One of the reasons is we were not keeping it separate, but when we did our last audit, the auditor says you really need to run this through your accounting system. And that's when we asked Colleen to start.
Yep.
And everything kind of got.
Jumbled.
Michael, that's a sticky question because we still don't have the 2021 audit. And we can't do the can't start the 22 audit until we have the 21 audit. Because we can't close the books on 2022 until we know what the auditor's recommendations were for 2021, which we don't have yet. So we're a little behind on cleaning up the financial system. I think, I mean, the good news is that, so we have this system and then we have the tip fee, the asset management order, which are two parallel systems, which means that we have a system of internal control where one can be reconciled with the other and they're done independently. So that gives confidence in the results, but it does result in some interim products that aren't always intuitively easy to understand. And so I just wanted to, that's an ongoing situation. I don't know how many times we said, well, let's put this off. We're going to be in a new accounting system in a month or 2 months, and then it didn't happen. And so we have this little series of measures, but this particular sheet is particularly misleading because it omits the asset that offsets any liability that the MRC would have to joining members. It doesn't show that liability as an equity position, and it doesn't, and it continues to have something called reviewer exclusivity on the balance sheet, which shouldn't be. So I just want, I mean, I'm a little nervous about having this distributed beyond the committee because it's easily seen in the wrong light.
Did that answer your question, Bob?
I'll be specific and maybe this will help verify it for me. We're showing as a negative asset, which is a liability.
Yep,
Yes, because it doesn't belong to us.
Well, I thought the exclusivity money belonged to the MRC.
yes,
It does, doesn't it?
yep.
Is it?
So it's a negative asset, which means we owe it to somebody, which makes no sense to me because that's done. But-
So. But is the title just wrong?
Right, because, I mean, at the end of the day, the US doesn't have any money. So all the money that is anything MWS needs is funded by MRC, but we're using these deposits also.
And for that matter, we've already spent all of that exclusivity deposit money on upkeep of the
Yeah.
facility. So essentially, it's
So.
to me, that's got expenses that offset that negative liability.
So I'm gonna jump in here and suggest that we have a finance. I don't know if it's a committee meeting. I'll poll members to see who wants to be part of it. Where Mike, George, Lita, and I can sit down with people and we figure this out and get them where they want to be. But I think we have been at the mercy of trying to shortcut. Thinking that we're gonna sell this plant and it's just gonna be a little bit of time. And a little bit of time is growing.
Great.
Does that make sense? So can we
Yes.
park this? Would you be comfortable parking your question temporarily and then we can come
I'll
together?
leave it, I'll put it on the table.
All right. So can we look at Mike's budget to actual that he has done? You want to quickly hit the highlights, Mike, or would you like?
Yeah,
me
I
to?
mean, I think we're okay. I don't think, I know we're okay. If you go down everything, so I am operating on the standalone budget. If you remember, two budgets were approved that we submitted depending on where we would be come the start of the new year. We had a standalone button and budget and a partnership budget. I am working on the standalone budget. So we are at 25% of budget where we should be, but actually, we're actually a little bit ahead because we have several annual payments that have been made when it comes to our insurances. So when you see the 70%, the 50%, in the marketing, those are some dues like the MMA and those type of things in our insurance payment. So those have been paid already on an annual basis, our web hosting. So we're in good shape, the expenses to secure the CRM are running over. But once again, we've only budgeted so long. We didn't budget a whole year to be doing that. We only budgeted so long to be doing that. So currently, I feel we're okay on the budget. We're right where we should be.
Okay, questions about the budget? We're good? Can we talk a little bit about our aging invoices? I had a couple of questions. Or like, I'm more concerned in the more than 90-day category. We've got the town of Lee, I think. And
I don't. Oh, I'm sorry.
Terry
I'm sorry. I was looking at the wrong
Yeah.
one. There's two.
Freedom's got a heck of a credit.
Yeah, where's the credit come from?
I'm gonna guess they overpaid and they're
Yes.
just billing to
Yeah.
get the credit.
They decide, we always call and they decide whether they want to just run it as a credit or get a reimbursement.
But my big question, so I guess my first question is, when do we start chasing people if they haven't made payments? Do we let it go 90
Well-
days?
Yes, but we used to have a kind of a little bit of leverage. When we do collections and we get around the 90-day mark, we're usually doing distributions at the same time. And so we don't send the distributions and apply them or say we're not sending the distribution. And now that we no longer send distributions, we just have to do a full collection.
Okay,
So I can work on that.
so I'm not.
It was a little bit easier with the distributions coming behind them.
So I was trying to find the example, but the other thing that kind of was a new thing for me was looking and seeing that we're billing not our member. There's at least one instance of us not billing our member, but hauling company.
That's commercial for Hamden. Hamden has commercial waste flow and they have us bill commercial haulers directly. And that's been like that since I took over the billing.
That's another point of discussion to have.
Yeah, we can have that point of, yeah, let's have that discussion offline. Just if everybody decided we were gonna bill their commercial haulers, I know Larno's got, I think, 4 commercial haulers here that we bill. We get a bill from MRC and we bill them out. I think Bangor does the same thing, Brewer. So,
Well, and that was part of what the admin fee is. So Hampton in theory is accruing admin fees.
No, they waive their.
Oh, they
admin
waive
fee.
the-
Yes, yeah, that I will, they do not do their admin fee.
Okay.
And that was one of the.
Even so, MRC should be assessing an admin fee.
and, okay, that was just a question.
Okay.
Any other questions? I don't know that I put the dues AR in there. It was all just tip fee. Asset. So we were gonna talk about, yes.
Sorry. Sophie. I have, in my packet, I have 2 accounts receivable aging summaries.
One's dues and one is tip fee.
Tip fees. I'm guessing the larger ones are tip fees and the
Yeah.
smaller ones are the dues.
Don't move. Difference between 80-something dollars a ton and $1.50.
Yep.
All right, so then, we're gonna talk about cash, and I thought the best way to do that is if George could just hit the high level pieces of his asset management report, and just highlight for us anything major.
Okay, I guess first high level report is we're done with, the MRC is done with the 36 months of distribution. So we're not showing any recommendation for distribution in the asset management letter. It's just a matter of transferring money to operating costs and continuing to defer the $92,000. So the recommendation was $50,000 transfer to the operating account, which actually Michael can address. In terms of the actual position at the end of March, so I always tie the financials to the end of a calendar quarter. So you'll see the numbers will be a little different than the statements you saw as of April 13th. But and then the MRC had total assets of $5.5 million. And of that, about, well, I'm carrying 1.14 is the value of the site, which is what after turnover of the road, which is what the accountant recommended in the last audit. And I'm incurring for investment in MWS. And I'm actually doing this a little differently than the bookkeeper is. There's the amount that was actually spent on the purchase net of reimbursements, which is the 1.169 million. And then if there's an expense after purchase in advance of, the sale, which I'm considering to be something that's capitalized in advance of the sale, and that's the 342,000. So it's about $1.5 million investment in MWS LLC and about 1.1 of the site. So it's 2.6 in non-cash assets, about 588,000 receivables. And again, when I do receivables, I'm accounting for every ton that was actually bypassed through March 31st, whether or not an invoice had been issued and whether or not an invoice had been paid. Again, on advice from the auditor. So if it's 2.5 and another basically close to 600, that's 3.1. And then the cash is about 2.4. And that includes the contingency account, this TIFI stabilization account, which was about just under $1 million as of the close of business on March 31st. And then 300,000 and change in the cash collateral account. And then some other money in the First National Bank in the cash accounts. We still have 42,467 from a state grant that's being held in escrow. That was that prime grant fund that hasn't been used yet. And I can't speak about the actual grant conditions of the status of that, but I do note it separately on the balance sheet. And in terms of liabilities, 92,000 in deferred payments to joining members. Those are the fees that the board voted to defer in the previous 3 quarters. Other payables are both the liens. And then again, I'm accruing bypass disposal costs for every ton that's been delivered, even if the disposal facility has not yet invoiced for it, because we know what those numbers are going to be, even if we don't have the invoice in hand yet, and that's the 691,000. So those are the base. That's a quick overview of the financials, and then the second page is just reconciling cash with the change in that position. So you do it 2 ways. You get the same number. You make sure that it's internally consistent. Questions?
Questions for George? I'll just point out that we're further ahead than Mike predicted. That's all I'm gonna say.
By a long stretch.
Yes. So, the other thing in your packet is our investment advisors report on the allocation of our funds. We have kind of taken this pattern of protect what we have and keep it short. And as soon as we have a clear idea of what the future is going to bring, we'll dig back in with a new strategy. You good with that?
Sense.
Okay.
I would love to see like ladder maturity,
I will
Why
ask
it's
for
so
that
hard.
again.
I don't know why it's so hard for these
Yeah.
investment people. It's like, it seems like the most.
So,
Yeah,
George,
Karen,
I-
a couple of things. Karen, if I can jump in. If you look at the bottom under tip fee, fixed income diversification, the short-term bond funds in the Dodge and Cox Income Fund, that's actually a portfolio. It's those are not holding the actual bonds, it's holding a bond fund.
Yeah, so it's like.
So half of the tip fee asset is not in assets that have a specific ladder, it's in funds that have their own ladder, and we have a piece of that. The international bonds that we do have has a ladder, and we actually have that. I mean, I could put that out, and then the CDs also have maturity dates. I mean, I could look, I could, those are some things that we have, we don't have that many CDs at this point. And similarly for it says coastal asset allocation, it ought to say cash collateral account, because coastal's obviously out of the picture. But again, the Dodge and Cox Income Fund, is actually not, it is a fund, but the other bonds are bond holdings. So there's a ladder. If you want between now and then I can actually look at the statement and get you a sense of the ladder.
I will ask Mike to just request that document.
Preferably in a bar chart form.
I would ask for it, 'cause we're paying them for management fees,
Exactly.
let them manage. All right.
Yeah.
I want to be, yes,
Just add one thing, and that is, we are in these bond funds. We're on the lag, so we're going to show continual losses unrealized.
Yep.
As interest rates go up. And I've always been a proponent of the idea that if you're investing in a bond, you invest in a bond.
Yep.
Not a fund.
that's what we used to do.
Yeah. Now, it doesn't make a lot of sense because the amounts we're talking
Are so small.
are modest.
Yep.
But I hope at some point we get back to that.
I would agree because I think it also allows when we're trying to do forecasting and we know if we hold it, we're gonna have this much money.
Yep.
So I would wholeheartedly agree. I can't wait until we have another $25 million to invest. So I want to be respectful of the board's time, but there's one more piece of business, and that is the accounts payable. I forgot that in my sheet, in my packet. It's on the table in front of you. We are totaling $32,998.93 that we want approval for. All but $100.91 we would be looking to pay. That other amount has already been paid. It's an automatic electronic payment. There was nothing out of the ordinary in these payables. I would suggest that if MRC could get itself in a position that we look good for commercial credit lines, we might actually want to look at getting our executive director a company credit card. We've tried that once before, but when we're using our funds to exist, it doesn't look good on the on our audit, when they read the audit from a creditworthy standpoint. So they would not, we couldn't open a corporate credit card. But I think we need to look at that in the fall, because having $2,200 out on his personal credit card is not something I'm comfortable with. I don't think that's fair. But other than that, I think everything else is normal. His expenses, he gives me the receipts for all of his expenses and they're legit. I just have an issue with him fronting them on them. You look like you have a thought.
I do it at work, but I get my points on my credit cards. I'm not into trouble, so it works out for me, but it's a personal preference. But yeah, I mean, I totally agree if that's something he wants. I mean, even if we were to get something with like a small limit of like $5,000 or something, I'm sure that the auditors would not have a problem with a smaller amount.
It wasn't an auditor. We filled out just a regular commercial credit application, and the problem is the MRC doesn't show assets because we don't own anything. Our members own it all.
Yeah.
We don't show revenue other than the tip fee, the member dues. And it just, they looked at it and they called me back and they said, you have expenses, but you don't have enough revenue to cover the expenses and you have no assets. And I'm like, but, and so, and I'm not comfortable with like a debit card that would tie, because that, I mean, I'd be comfortable with Mike. I don't have any issue with Mike, but from a policy or practice standpoint, that's not ideal. That the money could be used before the purchase was approved. So just my thoughts.
Do we use the cash?
Yes, we do.
You can get one right through them. That's
I
how-
know, that's
I mean,
what
that's
we
easy.
tried.
I got a letter, they actually sent a letter from the bank backing it themselves.
They didn't do that for me, so I'm just saying. We can ask, but I think I think Mike should have a company credit card in his pocket. So. That's all I have, folks, and I'm over time.
Great job.
Thanks, Sophie. All right, are we ready to call the next meeting to order? All right, I will do that. Welcome, everybody. Our first item on our agenda today is approval of the agenda. Do we have any changes? Anything we need to add? I will say that we have on there an executive session if needed, and we don't anticipate we'll need that today. So just a little forewarning. But next up, we have consideration of the minutes, several considerations. We've got the January 25th, 2023 quarterly meeting, the January 31st, February 14th, February 22nd, February 24th, and March 8th special board meetings. We've been busy. Can I have a motion to approve those minutes?
So moved.
Second.
Right, motion is second. Any comments, changes, corrections needed? All right.
I'm just incredibly thankful that we're not trying to keep that level of detail. She does an amazing job.
She does. All right, all in favor? All right, passing on. Next up, our Executive Director, Mike Carroll, will give a report and an update on how things are going and what's happened in this last quarter.
Yes, thank you, Karen. This is the regularly scheduled quarterly board meeting, so my report is based on a review of first quarter 2003. With the town hall meeting MRC recently hosted a couple of weeks ago, there might be some duplication in my updates, but I have tried to keep them high level and brief. So we'll begin with MRC quarterly stats. The MSW tonnage for first quarter, members total MSW tons for first quarter of 2023 were 18,691 tons. Last year's members' tons for first quarter were 18,152 tons. An increase year over year of just about 540 tons. Bypass notices recently. Secondary bypass, we have been in a secondary bypass during the first quarter, which means about 2/3 of the MRC's member waste has been going to Juniper Ridge and then swapped back to Crossroads landfill. We have been working closely with PERC, and once capacity issues are resolved at PERC, then they can run consistently. We will work with them to return a percentage of the MRC waste back over to them. DEP permitting. Back in August of 2022, just shortly after MRC acquired Municipal Waste Solutions, MWS, we submitted an application to DEP for a global transfer of all DEP permits issued to the Hampton facility. This meant removing the former owner and operator's names from the existing permits and adding the new identity, Municipal Waste Solutions. I am pleased to inform everyone that the process has been completed and we now have new permits in hand. I want to thank Haley Ward and the DEP for all their efforts in assisting us in completing this process. Grant applications in Q1. Led by MRC board members Bob Butler and Aaron Hoodery, MRC has applied for grant and earmarks in Q1 for funding upgrades to the MWS facility. One of the applications was for funds under the Solid Waste Infrastructure for Recycling, known as SWIFR. MRC has also submitted applications for CDS, congressionally directed spending funding, known as earmarks, with Senator Collins and Senator King's offices. We have not heard back of any of these applications yet, but are hopeful that approval and funding will line up with the restart of MWS facility. Funding would be used to purchase and install equipment needed to scrub the natural gas produced at the facility before being sold and injected back into the pipeline. MWS facility update. On January 31st, 2003, MRC did not extend exclusivity agreement with Revere Capital Advisors LLC for the purchase of the majority ownership of Municipal Waste Solutions, MWS. Since exclusivity ended, and there was no closing, the MRC board decided to promptly move forward and seek partnership through another solution. Time was of the essence because MRC's finances were becoming more limited as we moved into 2023. MRC sent a second round of solicitation letters out to potential partners on February 3rd. 10 letters went out to parties that had been in touch with the MRC. These detailed letters stated that Municipal Review Committee is seeking a private partner to recapitalize and reopen the Municipal Waste Solution Recycling and Solid Waste Processing Facility. The letters covered the existing conditions, goals, and tasks for reopening the facility, business terms, and the solicitation process MRC requires. The letters also state that MRC is also open at this point to reviewing any proposals from different technical approaches to process and achieve the required diversion levels that might involve modifying existing equipment or reconfiguring existing equipment. Proposals were returned to the MRC on February 20th, 2023 for renewal and evaluation. Out of 10 potential buyers/partners, 4 of them were hard inquiries, requesting lots of data and scheduling meetings with the MRC and former vendors of the facility. MRC then took the next several weeks after proposal submission, analyzing and vetting them. After MRC board staff and consultants reviewed and spoke to everyone, it was narrowed down to two potential buyers. In March, the MRC board chose to move forward with innovative resource recovery, Innovate, which is an identity created by White Oak, which was one of the top 2 final proposals. We quickly started working on the term sheet and exclusivity agreement, which was executed with Innovated in late March. Some key terms that were executed in the agreement are as follows. MRC retains 10% ownership in NWS, which includes a seat at the table and one of MRC staff fulfilling management role at MWS. A purchase price of $3 million was agreed upon, which provides MRC back the funds used to purchase the facility and pay off current liens attached to MWS. A $350,000 non-refundable deposit to MRC for exclusivity was required, which we have received. And a deadline to close by June 2nd on 90% ownership of MWS. Why we chose Innovate as MRC's potential partner. They have a division at their firm that specializes in turning around distressed assets. Their financial capability of being backed by a multi-billion-dollar asset management firm. No borrowing funds is needed or seeking of investors before closing. Funds are available to them now. And finally, the team they bring to the table is incredible, with backgrounds in recycling technology, engineering, environmental services, waste long haul operations, and finance. Since exclusivity, Innovated has brought their team in twice now. Each time, several days were spent at the Hamden facility. They have aggressively jumped in head first to perform due diligence and have already executed several meetings with engineering consulting firms specializing in permitting, the wet end, the MRF, anaerobic digestion, and gas production. We have taken Innovated on a tour of one of MRC's larger members' transfer stations so they could get a good idea of the composition of the MRC's municipal waste. Individual meetings have occurred with DEP and Hamden Town Manager and Public Works Director, and much more has been happening behind the scenes. Innovative is eager and focused on the immediate efforts of the facility upgrades, employment, and restart. MRC is doing everything we can to keep pace with them and get them the information they need to make a formal business decision and get this deal to fruition so that MWS can restart and service all our members' waste and recycling needs again. While MRC is hopeful this 60-day agreement with Innovate will come ahead in a definitive partnership by June, MRC is continuing its parallel efforts to secure its own loan financing to ensure the path to a necessary reopening capital in place by early summer if needed. MRC's President Karen Fussell and I spoke to the Joint Standing Committee on the Environmental of Natural Resources, ENR. This was an opportunity to educate and update legislators on the MRC and the work that they have done over the years to bring solid waste processing and recycling to our region. We also discussed the hope to secure private sector funding for restarting the Hamden facility and the need to pursue alternate paths by securing a loan using the facility as collateral with a pledge of a government guarantee. The committee seemed very receptive to the presentation and recently sent MRC a letter thanking us once again and asking for more detailed information. We answered ENR's request and await to see if they have further questions or require any additional information. In other committee news, MRC submitted testimony to LD 1171, an act to raise funding to support waste reduction. We have testimony prepared to submit for next session for LD 1660, an act to provide that advanced recycling facilities are subject to solid waste regulation and that advanced recycling does not constitute recycling. And MRC Board Member Tony Smith has been leading the charge with the Waste Flow Committee members on Extended Producer Responsibility Program for packaging known as EPR. That's all I have this time for my update. Thank you, everyone, for listening. And I'd be happy to answer any questions the board may have.
That's fine. Great summary. I'd like to also mention, we met last week with the Commissioner for the Department of Economic and Community Development. Erin and I went down and had a very productive conversation with her, and she gave some great ideas of how we can further work with the legislature and the state agencies to work towards loan financing. So we're working on that as well.
Oh, thank you. I'm just wondering if you've seen any red flags at all at this point, or anything we need to be worried about.
With the due diligence?
Yeah.
No,
Good.
I think that, at this point, I believe the strategy is there's been two buckets, what we must accomplish prior to a closing and verify, and then, what will need to be continued to be worked on. But we actually were able to have a conversation with them last night. Karen and I jumped on a quick meeting, and we were told by the lead that actually things are looking really good. So
All indications are positive right now. So
Yes.
that was very encouraging to
Yeah.
hear,
Yes.
especially since they're really within a few weeks of having to make a sort of decision, a go, no go decision.
Okay.
But
it's just corralling it, there's so much due diligence and work and people to be in. So it's schedules. But.
And I know we covered it in the town hall, but I want to be clear with folks that are listening that even though when we went out for this latest round of solicitations and proposals, we allowed folks to come in with new ideas and changing out the equipment and things. This group that we're working with, Innovative, really anticipates running the facility as it was designed, by and large, if not enhancing it to, improve diversion rates and things like that. So they're really not looking at it wholesale changes to the technology at all. They're really looking at the facility as it runs now, looking at what it's going to take to restart it with the equipment in place. So.
Thank you.
Anybody else have any thoughts, comments, questions? And I want to let folks in the audience know that we do have a public comment period towards the end of the meeting. So people have an opportunity to ask questions or make comments. We're happy to take those then at that time. So. Yeah,
My
Sophie?
only comment is, wow. People have been doing a ton of work. We've been talking about Mike pretty routinely about all of the work that he's doing, but it's more than Mike. It's our consultants, it's our board members, Aaron and Bob and Karen, that have really stepped up in a major way. Tony with the EPR stuff. So I was really taken in your report, not only as always thinking, I don't have any idea how you managed to get all of the work that you can accomplish, plus sleep and perhaps get a little bit of hunting or fishing in, right? But just, it's nice to see other people stepping up to get active. So thank you very much.
Great point, Sophie. Thanks for mentioning that. All right, moving on. We have our asset management report. George.
Hey, thank you, Karen, and thank you to the board. It'll be a little briefer this quarter, just to recall the MRC had a 36-month obligation to distribute cash each quarter, $5 a ton and $3 depending on the status of the joining member. That was completed in October, so the last distribution was approved at the last quarterly meeting. And so that's not a subject we'll take up today. So what I'm going to do is just briefly talk about the financial status, address a few issues that arose during the Finance Committee, and then take questions. There is a recommendation, which I'll put out there, which is consistent with the prior board decisions. The board had decided in 2022 to defer payments of about $92,000 to reimburse fees not collected in prior quarters. And my recommendation is to continue to defer that payment, and also to authorize a transfer of $50,000 from TIFI stabilization fund to the operating fund to fund MRC administrative expenses, which is consistent with the 2023 operating budget. But just turning, and I'm going to spend my time on table one. There was a little discussion. The MRC has keeps its books on two tracks that we can reconcile as a method of internal control. The data table one, and I apologize for the small font, but it's a lot of information to put on the page, is all based on the bank statements, and it can all tie out to the bank statements for each of the individual accounts. Just to run through it really quickly, there are some hard assets shown. The site is valued in accordance with the last auditor's recommendations about 1.14 million, which is a cost basis. If we did an appraisal, we might get a different number, but for now we're sticking with the book cost on the bank statement. The investment in MWS LLC, two numbers are shown. One is about 1.17 million. That's the net purchase price from last August 9th, 2022, when the MRC actually acquired the assets and set up MWS LLC and put those assets in its name. So that's the MRC's net cash investment in MWS for the acquisition. And since that time, the MRC has advanced about $342,000 in cash towards securing the condition of the assets, which are shown as a capitalized investment. Now, 2 points here, which is, first of all, these are financials that show the consolidated position of MRC and MWS. When we get through the term sheet, probably sounds like it, if there's a closing in June and then in July, we'll take the next step in making sure that MWS and MRC's positions are clearly delineated. For now, MWS is a single owner LLC, which is disregarded in these statements, which is the practice for single owner LLCs when there's no separate LLC. So it's consolidated. We'll break it out after there's a closing. But if you look at it, the 1.11 and the 342,000, it's about, call it roughly 1.5 million invested in the MWS assets. So the hard assets there are about 2.65 million. You look up their receivables, about $588,000 as of the end of the quarter. And again, in accordance with the auditor recommendations, this is not only amounts that have been invoiced and not paid, but it's also for tons that were bypassed and accepted at the disposal facility, for which invoices haven't even been generated yet. In fact, the payment record is good. Well over 95% of the invoices are paid by our municipalities within 30 days. And then we have the cash accounts above that. So if you look at the cash total, it's about 2.25 million, which is a little better than we're concerned we would have at this point. And the total assets are about 5.5 million. If you have the liabilities, there's the 92,000 in deferred payments for the fee reimbursement, which I mentioned earlier. And then the other two categories of liabilities are the lien payments, about a little more than $250,000 outstanding as of March 31st. And then the rest is costs accrued for bypass disposal, including not only invoices that are outstanding, but frankly, it's waste that has been delivered that the disposal facilities hadn't even invoiced for yet. So we're staying ahead, again, with our conservative accounting, we're putting down as a payable amounts for which we know invoices are coming, even though they haven't been received. All of this leads to a net position of about $4.5 million. About, as I said, about 2.25 of that is cash, and the rest is the asset. So that's the position of the MRC. It's a little better than we had forecasted. And we're going to continue to show things conservatively and hopefully continue to have results that are a little better than we're planning for. So that's the report. Again, my recommendation in the letter is to transfer the $50,000 as stated from TIFT to the operating fund and to defer the payment on the 92,000. Question?
Thanks, George. As always, we're very glad that you have such a thorough understanding and keep such detailed accounting records and know exactly where we stand. So, does anybody have any questions for George?
I would move the recommendation.
Excellent. Okay, so Sophie's moving the recommendation. Yes. And they've been seconded by Aaron. Any concerns? All in favor? All right, thanks, George.
Thank you.
Okay, and Sophie, now you're up.
I am. So we had a just dazzling finance committee meeting. We reviewed the budget to actual reconciled budget to actual report that Mike provided. And looked at the financial statements. Questions are there regarding how we are commingling and reporting MWS funds. We're going to do a little bit of research on that. I'm going to talk to Bob offline to see what we need to do before June, if anything. And so the only other item that we really talked about was the bills payable. So we're looking for approval to pay $32,998.93 in March payables. All of the regular routine, did I say? Right, okay. All of the regular payables that we would expect, nothing out of the ordinary. But need your permission before I sign the checks.
I'd make that motion that we authorize those expenses.
Second that.
Motion and a second. Any questions for Sophie? All right, all in favor? All right, nice and easy. Moving right along here. We wanted to let folks know that we have another quarterly board meeting scheduled in July 26th. I think it's always the fourth Wednesday of
Yes.
every 3 months. I anticipate we'll have some meetings before then. So just keep your eye on your inbox. We'll be sending out those meeting notices as always in advance of any special meeting that we call. And then we have one more gem before we head to public comment, which is our perennial review of our extension letter regarding integral capabilities for performance test protocol. And this is always one for you, John.
Yeah, hopefully this will be the last one, but I'll
Wouldn't that be
reserve
exciting?
stating that right now. As the board and probably folks remember, this is a quarterly item that we've had on the agenda. It harkens back to when the Hamden facility initially passed the performance test protocol. Back, I think November 1st, 2019 was the exact date that's pegged to. Although it passed, there were certain conditions looking for certain improvements to the past test, we'll say, on the performance test protocol. That's what we call the integral capabilities. Efforts were ongoing to meet those conditions, but as everyone knows, the facility suspended operations as of June 1st, 2020. So since then, and we've been, the recommendation has always been to extend the deadline, I'll call it, or time period to meet those integral capabilities as conditions. The reason why is because they're pegged to key agreements that help provide the contractual structure and framework that make the facility attractive economically when it gets reopened. So this may be the last time, but the recommendation still stands to extend the deadline for the integral capabilities. The recommendation would be similar to the last one. We're doing it quarterly. So 2 days after the July 26th scheduled regular board meeting would be July 28th. Because MRC wholly owns Minnesota Waste Solutions, the president of the board is authorized to act on behalf of Minnesota Waste Solutions pending authorization of this board. the suggested motion is both to authorize by Executive Director of MRC to sign the extension to July 28th for the integral capabilities, as well as authorize the President of the Board, Karen, to sign on behalf of Municipal Waste Solutions, again, to extend it to July 28th, 2023, subject to the same terms and conditions that are in the existing extension letter. This is just a motion.
I would make that motion as he so eloquently stated.
Second.
All right, we have a motion, a second. Comments or questions, Kevin?
Is there any trigger that would require us to redo the performance test? Meaning, you, myself, Tony, and George spent a lot of time performing that performance test back on that date that you just mentioned. It seems so long ago. And now that it's been shuttered, there's a whole new, if it's assuming it gets started up, new ownership, new financial standards, I don't know. Is there anything that would require us to redo that performance test?
If I can jump in, and Mike, please feel free to supplement. So what we're expecting, and it's a very good question, because we've been thinking about, well, how do we, it's really part of a reopening now. How do we know it's reopened, for lack of a better phrase? The simple, straightforward test, one might say as well, it's now taking all the member waste. That's a pretty good indicator that it's reopened and in compliance with permits, for example. So that's one thing that we have looked at in some fair depth before. It's really, in my mind, as was mentioned back in the, I'll call it the member fundamental matter memo framework. There's what's contemplated is something like a consent forbearance agreement to allow a period of time it's reasonable so the facility can reopen. And then we have to have, how do we know once it's reopened? So I'm fully expecting that definition, as we'll call it, what metrics we'll be looking at and using to help pinpoint that. I suspect, although I can't say with absolute certainty, it's not going to be precisely the same. In fact, it will probably look different or have different metrics from the prior performance test protocol. But the underlying purpose will be, okay, now we're reopened, commercial operations have resumed. It's not just ramp up, it's reopened and ongoing. How do we appropriately characterize that so we know that that milestone has been hit going forward? So that's very much a focus as part of startup, ramp up, resuming commercial operations.
Yes.
Yeah, John, can I jump in here? Kevin, I guess there's nothing that requires it at this time, but my guess is that when they start up the facility and they're showing permit compliance, they're going to have to do a mass balance around the facility to show that to show DEP that they're meeting the 50% diversion or whatever the diversion number is. And in order to do that, they're going to have to calibrate everything and run the numbers. And I would not be surprised before this is done if we're going to have some variation of the performance test that ends up being done to start the resumption of commercial operation date anyway. I think we haven't sat down and had that specific conversation with the with the startup folks at this point. It's on our agenda. It's one of the issues we're looking at as we look back at the site lease, because that's the agreement that defined the initial performance test and its need. There are ways to do it without the test. There are ways to do it with the test. The test costs money and effort, but it generates value and information that's worthwhile. So we're going to go through that process probably in the next few weeks and see if we decide to do it or not. But I wouldn't be surprised if it really.
Yeah, so the 50% diversion is the trigger, and I just wonder, we were essentially, even though common operation between the MRC and then the past owners, we were a separate set of eyes looking at it, right? When we were there to do this. And so you had mentioned, sure, they'd be up and processing waste. Well, that doesn't mean that they're meeting the 50% diversion. So
I just wanted to see, no one's asking for anyone to do more work or anything, but, I didn't know if there was something that DEP would require for their permitting to have it looked at again, an audit, or it is operational audit. Because what is the definition of being open and operating? It's meeting the 50% diversion, isn't it? Or
Yeah,
is it
yeah.
not?
And no, I think that's exactly right. And it might be that if you weigh what goes in and you weigh what goes out, it might be obvious that there's no question because they're way beyond 50%. That's what we hope happens. But if they're close, and then you have to start asking questions. Now, wait a minute, the moisture of the waste going in is different than the moisture content of what comes out. How do you account for moisture content? You're making biogas that goes into a pipeline. It's a gas, it's not a solid. How do you account for that? You know, if those questions start coming up, and the answer is, okay, let's take a 3-day snapshot and a 3-hour snapshot and do all the numbers and see where it is. And it's quite possible that'll happen. I mean, there's a lot of sense to it. And part of it is we're not exactly sure at this point what measures Integrate will be using to monitor operations as well. If they have good enough data from ongoing operations to do that sort of analysis on an ongoing basis, we might not need to do a formal test if the data support the result we're looking for. So, I mean, we'll do something that might look at the test, how formal it is, we're still working.
Thank you. Any other questions or comments? I wanted to clarify, John, so you think that if we do consummate this partnership with Innovative, that this integral capability would go away right then? Or does it have to operate, actually prove that it's met the conditions of the?
But my expectation would be, let's say a closing occurred. Sirens go by before July 28th. My expectation would be the documents that would be part of that overall definitive agreement transaction will supersede, overtake,
Okay.
essentially
So the
move
consent
the
forbearance
extension. Because we will have something else that will
Take
be
its place.
specifically take its place.
Gotcha.
Correct.
Very good. We haven't voted yet. Any other comments or questions? Okay, all in favor of the extension to July 28th? All right, very good. Thank you. So that concludes the agenda with the exception of public comment. So now's the time when we would be happy to take comments or questions from anybody, members of the public, folks online. You can put your questions in the chat or you can raise your hand. Have somebody in the audience here. Any questions for Charlie? No? Okay. Is anything coming in online, Amy? Nothing. Okay. Well, that's, I guess we did a good job at the town hall. You did a great job in your update. So, well, I'll just conclude by saying thank you to Mike and George and John for all the work that you guys have done. It's really been phenomenal what's been accomplished. We're super encouraged because Innovative appears very motivated to stay within their 60-day time frame. And we're looking forward to a conclusion, hopefully favorable in that regard. But if not, we'll be moving in a different direction and folks will know what's happening in the near future. So, but we're feeling very encouraged and things look very positive right now. So we're super happy about that. And Mike, lots of it to do for you, working here 28 hours a day. Looking forward to a nice vacation for you this summer. I'm hoping we can do that. You deserve it. Anything else from anybody? Any other comments or questions? We appreciate everybody's traveling here to be in person for this meeting and folks online for participating. And we'll see you all in July, if not before then. This meeting's adjourned. Thank you.
Thank you.